Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we are following in the BNN Bloomberg newsroom. Canada will weigh opening its housing market to more foreign home buyers. In an interview with Bloomberg News, Housing Minister Gregor Robertson said Ottawa will maintain its current ban on foreign buyers through the end of 26, but will consider changes starting for 27. Robertson says Canada needs to ensure housing is built and owned for Canadians first, and Ottawa will review what has worked in other countries, particularly Australia. Shares of lithium royalty are surging, while shares of Altius Minerals are under pressure. You can see Altius down by 2%, lithium up by nearly 26%. That's because the Canadian-based explorer and developer is acquiring lithium for $520 million. Under the terms, Altius will gain ownership of 37 new royalties, with the vast majority of assets located in Canada, Australia, and South America. The acquisition will also create a significant pipeline to the battery metals component of its business. Shares of Baytex are moving higher, barely right now. That's because the company unveiled plans to spend as much as $625 million in exploration and development. That move is expected to generate production growth of 3 to 5%. Baytex says first quarter production is also expected to average up to 69,000 barrels a day and wrap up to 70,000 by the end of next year. Taking a look at the markets, the rally continues, maybe the start of a Santa Claus rally right now. You can see TSX up by 0.86% and well into record territory, above 32,000 for the first time. South of the border, again, good solid gains everywhere you look. S&P 500 up 0.68, Dow Jones 0.61, NASDAQ about the same, 0.62. And oil is up as U.S. President Trump intensifies a blockade on Venezuela. Let's get more on what this means for the markets. We're joined by Rick Gardner, Chief Investment Officer at RGA Investments. Rick, thanks as always for joining us. Where do we stand right now with what's unfolding in Venezuela?
Well, it's a very interesting story because we've seen oil disruption before. You go back to Russia and Ukraine, and it was a really big issue for the markets and for the global economy when you have supply chain disruptions. And so I would look to that as a guide. And so the good news, I guess, from a market perspective is we are domestically trying to increase the oil production here in the United States, lifting regulatory issues and that type of thing. Whereas in the past, we were trying to really curtail some of our oil production. So there may be a balance there. However, energy is a really big story as we head into next year. And basically for the foreseeable future, with the artificial intelligence story and the energy demands that it has.
Okay, I want to get to that in just a sec, but just talk Venezuela. The U.S. does import some oil, so this is any of the oil that they're importing affected by this?
Oh, well, sure. Oil globally, a disruption, you will see prices go up. So like I said, hopefully there would be some help in the pricing, but there's no doubt an impact. There would be an impact there.
But the actual oil itself, though, like, do we know? I mean, they're seizing supposedly the shadow fleet, but was any of that oil destined for the U.S.?
Well, to be honest, the shadow fleet, I don't know a lot about. I would not think that the United States would be importing oil from a Venezuelan shadow fleet. But I guess, no, I will say that's something I'm probably not an expert on.
Okay. And then with the energy, what kind of demand are we looking at when we start talking about AI, and what kind of an impact will oil have on that? What kind of an impact will it have on oil?
Yeah. So energy in general is what we're looking at with AI. Energy prices in general are going to be an issue going forward. That is the big constriction point here in the United States. we have to have the energy to fund the infrastructure that is so critical to the build out of the artificial intelligence and the computational power it requires. So what we're seeing here is kind of an all hands on deck, wind, solar, nuclear, and then also fossil fuels play a part in that as well. So again, with AI and that energy demand, you could see prices going up.
Now, and there are concerns, at least for oil, that there might be a softening market though for next year, and a reduced demand as well. How is it all balanced? How's that all playing out?
Well, reduced demand for oil is not something that we're looking at right now with the markets. I don't see that as the economy. We're looking at GDP growth. Some estimates are at around 4%. The consumption of energy and oil is something that I think we'll continue to see grow. That's our view on it.
And where do you see oil price-wise heading for next year? We hit a 5-year low a couple of weeks ago. It's bounced back a little, back up around I think 58 right now for WTI. Where do you see it heading?
Well, a lot of it depends on what's happening, I think, with Venezuela, and so the disruption that could occur there. I mean, we've seen it spike this morning. So it could go higher, but it's hard. If I were to make a prediction on the oil market right now, I would say that the price is probably going to reflect what's happening in Venezuela, and also reflect the increasing in production here in the United States. So which one of those two wins out, it's hard for me to tell right now.
And how is that increase in production going? Is it how fast is that happening, or how fast would they like to see it happen?
Well, I guess when it comes to oil production and the price that we're seeing right now, I will say I'm not an oil expert. I'm more of a financial investor. So I guess we're getting deep into a subject matter here as far as how oil production is happening here in the United States. That I can talk to you about what's happening in Venezuela, and I can talk to you about the price, but I don't work on an oil well.
Okay, yeah, okay. So more, I guess. Well, sorry, come back to Venezuela. It was getting into the weeds there. Can you see the Venezuela? What's going on? Do you see it expanding, the blockades and things like that, or where is the direction Venezuela's heading?
Sure. I think the administration has been pretty clear that they're looking for a regime change there. So I wouldn't expect things to necessarily change dramatically. I think they're trying to pursue a regime change, and they're doing the things they think that are necessary to do that. And that could have an impact on oil prices. All
right. We'll wrap it up there, Rick. Thanks very much for joining us.
Okay. Thank you.
Cheers. Rick Gardner is Chief Investment Officer at RGA Investments. Well, we're getting some breaking news this hour. Prime Minister Mark Carney has named former BlackRock executive Mark Wiseman as Canada's ambassador to the U.S., tapping an experienced investment manager to handle relations with the Trump administration ahead of major trade talks. We'll be following the story as it develops. Coming up, it's not just a Burl Live song. The markets are focused on silver and gold. And so is our Lindsay Biscaya. She'll be here with the latest. Gold and silver have been soaring to all-time highs. And for a look at the prices of some of these metals, we're joined by BNN Bloomberg's Lindsay Biscaya. Lindsay, thanks as always for joining us. Yeah, gold, it is rocking right now.
It is rocking, yeah. Gold above $4,400 an ounce today, so it's reaching new record highs after some time of not seeing some highs, compared to what we saw earlier this year. Silver has also reached a record high. That's super interesting to see at $69.04 an ounce. That's up almost 5% from where it closed on Friday. And then copper, which is what we're talking about a little less today, but it's incredibly interesting, also heading toward 12,000 a ton on the London Metal Exchange. So really close to another record high. That would be its biggest annual gain since 2009. Obviously, there's a lot of demand for copper right now with AI data centers. But what's really interesting is silver and the demand for silver, because it's up 140% year to date.
It's had a crazy year.
140%. Yeah. When you look at gold, it's up 70% year to date. So silver is actually outperforming gold. People just talk about gold quite a bit more. And economists say that silver is becoming more of kind of like an industrial commodity. Gold is not. Silver is used for AI data centers too. And there's more demand for it as we build out AI data centers. It's used for semiconductors, switches, controllers. But there's less production of silver than there is gold. There's literally just less of it physically. And so that's kind of why we're seeing this huge silver run, because there's quite a lot of demand for it. There probably will be as we enter 2026, but there's just less of it around.
Okay, and I guess the big question is, what happens if there are more rate cuts by the feds?
Yeah, well, that's part of the reason.
By the Fed, not
by the Fed, yeah, exactly. By the Federal Reserve. That's part of the reason we're seeing these prices go up today. It could be because of geopolitical tensions a little bit. We're seeing that, but we have been seeing that. And some economists are saying that's nothing new. So really what's causing these prices to rise is the potential for more rate cuts in 2026. Some economists expecting maybe 2 by the beginning of the year, but also who the head of the Federal Reserve will be in 2026. That's the big question as well. We were speaking to Paul Harris earlier, and he had more to say about that.
The U.S. is going through a very unique situation with the Federal Reserve, where you're going to see somebody new at the Fed. That decision is going to be made either later in this year or early next year. And I think that people are sort of concerned about who that person is going to be, whether they're going to be an individual that will actually take their job seriously, as opposed to being a substitute for the president of the United States. And I think that's really important. And so gold is kind of reacting to, I think, looking at those issues and determining whether we're going to see a more normalized Fed with Powell leaving, or a Fed that is, has much more to do with pleasing the president.
So what's interesting, too, is Harris was saying he believes the tariffs that we've been seeing this year are going to have more of an impact on the U.S. economy as we enter 2026, so potentially higher inflation, and that could also be what's driving gold prices up today.
Okay. Lindsay, thank you for that.
Thanks.
BNN Bloomberg's Lindsay Biscaya. Well, there's a sense of uncertainty among dairy farmers as Canada looks to renegotiate a new trade deal with the U.S. and Mexico. CTV's Jeremy Sherrill has more.
Does this 24 hours a day, 365 days a year.
For more than half a century,
I've been doing this, my whole life, but I took over from my dad in 1992.
dairy farmers like Peter Reuter have been protected.
When you drive by my farm, know that behind the door there's a farmer like me producing the milk to their standards that they want, healthy, pure, and local.
Canada's supply management system means the industry and its producers are afforded certain safeguards. Quotas and minimum price guarantees ensure stability and predictability. Supply management also protects the domestic market, limiting import access.
It's not competing against the American producer, it's competing against American subsidies.
But in dairy farms like this one across the country, there is a sense of uncertainty, concern over what CUSMA renegotiations in 2026 could mean for the system that local producers have long been accustomed to.
There comes an end point where it's not worthwhile to, give up that much market share. So we can't give up more.
This week, U.S. Trade Representative Jamieson Greer told Congress the dairy industry would be a priority in upcoming trade negotiations. Under the current agreement, the U.S. gets tariff-free access to about 3.5% of Canada's dairy industry. They're pushing to expand that. Prime Minister Mark Carney has repeatedly said supply management will never be on the table in negotiations, a position he stood by when asked Friday.
Not on the table. We'll continue to protect supply management.
In a statement to CTV News, the president of the Dairy Farmers of Canada says they expect this commitment to be honored as the CUSMA review process continues. But here on the farm, the threat is hard to ignore.
If anything were to happen, it'd be vitally impossible for me to continue.
A harsh reality Reuter and the dairy industry as a whole hope they won't have to face.
Compared to the U.S. farms, I'm miniature.
Jeremy Sherrill, CTV News, Ottawa.
In recent years, AI research has taken stage, but our next guest believes 2026 is the year of real-world deployment. That's coming up. Well, our next guest believes Canada's long-standing focus on AI research is about to shift. 2026, he says, will mark the year AI moves from theory to real-world deployment. So what does that transformation look like? Joining us now is Naim Antaki, co-leader of the Canadian Artificial Intelligence Group at Gowling WLG. Naim, thank you very much for being here.
Thank you, Roger.
What's going to be the difference? What's going to change as we head into 2026?
Well, we've always been leaders in terms of AI research, as you know, AI pioneers with various research breakthroughs. But I think that 2026 is really going to be the year where we see AI transforming Canadian industries at scale.
And
yeah.
Sorry, go ahead.
Go ahead.
Finish, please.
No, I was going to say it's, when you think about the budget and where we need to go as a country, productivity has always been an issue, right? Where we're trying to get better and better at it. And I think that's where, we really need to bridge the gap.
And does it feel like business industry has moved past almost the fear of AI and now they're starting to embrace it and realizing what it can do?
Oh, definitely. People are adopting AI. And let's talk about consumers, because consumers are important to businesses. If you think about from a consumer standpoint, we've gone from search to now answers powered by AI, and more towards agents and fleets of agents. And so that's an important shift. And so from the business's standpoint, I would say that Canadian industry has been really focusing on accelerating its AI deployment for use in operations, and it needs to continue to do more, but it's definitely advancing and accelerating.
Now, we talk about how Canada has been a leader. Are we ready to continue to be a leader in the new direction that this is heading?
It's a good question and a difficult one. Let's talk maybe about our strengths, Roger.
Mm-hmm.
I think we definitely have a great talent pool that we need to continue to focus on. We also have really good focus on responsible AI, which I think is really important for consumers as they think about different choices around the world and how they can trust different solutions and the companies that they've been working with for a long time. Right. However, we still have some catching up to do, I think, on AI compute and also on commercial deployment of AI. And this is where, thankfully, there are major investments coming online in 2026 that will help to close that gap, we hope.
And what are some of are there things extra things you'd like to see done that maybe aren't coming out just yet from the government?
It remains to be seen. So definitely in terms of from the government, I think clearer rules from the federal government will be helpful. We know that something is coming on the privacy side and maybe on the AI side, expanding more generally on the pan-Canadian AI strategy with additional investment in AI compute and commercialization pathways is going to be important. Companies, they want to scale, and they need the confidence to scale. But they also, for some of them, need to understand how to responsibly adopt AI. So you have different levels, if I can put it this way. And so I think that the government needs to work at both of these levels in order to encourage AI adoption on this point. The other thing that I would say, we were talking about strengths. Talent is something that is key. It is a global race, and there has been a recent research and attraction program, $1.7 billion to try to attract talent from around the world in research in science and technology, including AI. So I think that's a really important item, and of course, infrastructure. Access to AI compute is absolutely key for everyone.
And does it feel like the government is keeping up on those needs? And are we seeing results from that $1.7 billion?
Well, it's in the works, right? But in terms of the the results, the budget was announced in November. I think that you can see that the government is working as fast as it can on this, and I will tell you, always. a collaboration that needs to happen. Government can't do everything by themselves. It's also about, industry groups, and we see that definitely, helping companies to get more accustomed to what AI can do, and also consumers trying to be more and more comfortable with the idea. And so I think 2026 is going to be the year, to answer your question in a bit of a different way, where we see whether we are actually doing enough.
And then I'm going to jump, and because it's AI, we can do it that fast. 2027, what do you think? What do you see as the challenges as we head into that year?
I think the push towards agents is a really important one. So people have been talking a little bit about AI agents, but the automation of decisions, within companies, but also across companies, is going to be an important item to keep an eye on. And I would also tell you that as AI becomes, better and better at what it does, we need to really keep focus on what we are good at as humans, but also not to go too fast with respect to AI, because we need to be able to, understand not only its strengths, but also its weaknesses. And I think as, things are going to keep on accelerating in 2027, Roger, and this is where we may see a shift, from a talent pool, what is really needed from workers, students, et cetera, in order to continue, pushing that wave, which is important, keeping in mind that the most important thing here, productivity and trust.
Okay, we'll have to leave it there, Naeem. I could talk more about this, but thank you very much for joining us.
It was a pleasure. Thank you so much, Roger.
All right. Naeem Antaki is co-leader of the Canadian Artificial Intelligence Group at Gowling WLG. A trade war with the U.S. changed interprovincial relations in Canada. We'll take a look back on those connections and relationships in 2025 after this. Canada's Housing Minister Gregor Robertson says Ottawa will consider changes to its foreign homebuyers ban. In an interview with Bloomberg, Robertson highlighted that Canada needs to ensure housing is built for and owned by Canadians first, but says Ottawa needs to figure out the best role for offshore capital to play in the housing market. Robertson says the federal government will consider changes for 2027. Shares of Warner Brothers Discovery and Paramount Skydance are rallying in a continued battle to take over Warner Brothers. Paramount is amending its bid for the entertainment giant. It now includes a personal financial guarantee by Oracle chair Larry Ellison. Ellison has agreed to provide a guarantee of $40.4 billion U.S. in equity financing for Paramount's proposed bid for Warner. Paramount is also offering to increase its regulatory reverse termination fee. Shares of NVIDIA are up slightly after a report from Reuters that it plans to ship its H200 chip to China by mid-February. The report says the chip giant expects to ship up to 80,000 of them and also plans to add new production capacity, with orders for that capacity opening in the second quarter of next year. Beijing has yet to approve any purchases, and the timeline could shift. Well, the rally continues for the TSX. It is up again, just hanging on to that 32,000 mark. It was hard, but it's still up by 0.77% for the day. And south of the border, another good day for them as well. All of them well into the green. S&P 500 up 0.6, down 0.54, and NASDAQ up by a half point. It's been a year in which many of our countrymen have come together, united by a common goal to stand up for Canada. That includes the premiers of the provinces and territories. Team Canada, they were called. They came into focus in 2025 on the front line of the trade fight. But as CTV's Andrew Johnson shows us, old interprovincial rivalries are also being renewed.
In a year that started out looking like this.
I think Canada is going to be a very serious contender to be our 51st state.
We're going to
put very serious tariffs on Mexico and Canada.
Canada's premiers, the faces of each province, became a focal point of resistance against Donald Trump's trade threats.
As Canadians, we need to realize that he is not joking.
Each standing up to defend their provincial and territorial economic engines on behalf of Team Canada. An early move, all but two, opting to remove U.S. liquor from store shelves. Manitoba's Wab Kinew took a page right out of the American president's playbook.
It's a wonderful order. It's a beautiful order. This order is pulling American booze off the liquor mart shelves.
At the White House in February, the premiers met with members of the Trump administration, presenting a united front.
The worst thing we could do as a country is not show up.
For Ontario's Doug Ford, showing up meant going on the offensive, threatening to punish America by any means possible, including restricting power sales.
If the United States escalates, I will not hesitate to shut the electricity off completely.
Ford even urged Alberta to put an export tax on oil.
Their gas prices go up 90 to $1 a gallon. They will lose their minds.
That did not sit well with Premier Danielle Smith, who called the idea absurd and self-destructive.
You can ask me as much as you like. The answer is no.
Smith, who'd been criticized for visiting Trump at his Mar-a-Lago home in January, said diplomacy, not retaliation, was the best way to deal with the president. The Team Canada narrative was also interrupted in May, when supporters of Alberta separation celebrated a Smith government bill that would make it easier for voters to force a referendum. Smith said she didn't support separation, but also wouldn't stand in the way.
I will respect the outcome of citizen-initiated referenda, and that's why it's my job to make sure it doesn't get to that point.
I want to welcome everyone.
By summer, 6 months into the trade war, premiers and territorial leaders were in Ontario cottage country, talking trade, tariffs, and teamwork.
Right now, our economy in all Canada suffers because of the uncertainty.
Another goal of the three-day summit was to make it easier to move goods between provinces at a time when many discovered buying Canadian could be difficult.
I can't say how many times I've heard it's easier for me to access Alabama than Alberta.
In late September, Trump again turned up the heat, announcing new tariffs. Ontario's response got under the president's skin.
When someone says, let's impose tariffs on foreign...
A $75 million ad campaign airing on major American networks starring former President Ronald Reagan.
Over the long run, such trade barriers hurt every American worker and consumer.
Trump called the ad fake and promptly ended Canadian trade talks.
They did a crooked ad. They know it was Ronald Reagan loved tariffs.
Ontario ended up pulling the campaign early, but the man who authorized it was downright Trump-like in declaring its success.
It was the most successful ad in the history of North America.
It was around this time cracks in the Premier's Team Canada collective widened out west over Alberta's pitch for a new pipeline to send bitumen to BC's northwest coast. Despite a hard no from BC's David Eby, Danielle Smith pushed to have the proposal added to Mark Carney's major projects list.
Premier Eby's comments are un-Canadian and they're unconstitutional. All it takes is the Prime Minister to say yes.
It's not the Danielle Smith show, it's the Canadian team. And we all deserve the same opportunity for the same federal funding for our projects as she does for hers. That's not un-Canadian, that is fair.
Smith got what she wanted, a memorandum of understanding signed by the PM.
I think it's going to unleash an incredible amount of investment.
As 2025 comes to a close, with Canada and the U.S. still deadlocked on a trade deal, we can expect a continued focus going forward on the premiers, advocating for their provinces and territories and trying to get along. Andrew Johnson, CTV News, Vancouver.
Amid the rush to finish up holiday shopping, new reports find that many Canadians are choosing to spend less this year. Families are looking for savings just about everywhere they can. There's one big exception, though. CTV's Colton Prale with more.
It's the season of giving. Merry Christmas! But some Canadians find themselves giving
less. And you can do it if you're good at knowing what the prices are.
A new survey from TD Bank found more than a third of Canadians are cutting back on holiday spending. up from last year.
Me and my partner decided actually not to exchange gifts between the two of us this year. It's so expensive.
It's not just presents under the tree that are getting trimmed. According to TD, of those planning to save this holiday season, nearly half are cutting back on social spending.
Especially with groceries are way more expensive, so it makes like hosting and having parties a lot harder.
But even as holiday budgets decrease, 46% of people are actually spending more money on Canadian products, according to Business Development Canada. At this Ottawa artisan shop, that's leading to a boom in new customers.
When folks can check all the boxes and they're not draining their bank account or taking out loans just to support the Canadian economy, then it's a win-win.
Still, according to TD, over 3/4 of Canadians admit they're vulnerable to overspending on the holidays, feeling the pressure to create memories or spend extra to give meaningful gifts.
It is something we're willing to pay for because we really want to support Canadian producers and makers of products.
According to a report from Business Development Canada, if families spent an additional $100 of their expected holiday shopping on Canadian products like this one, the benefit to the national economy could be as much as $2 billion.
That was CTV's Colton Preo. Coming up, one company is donating 8 retired delivery trucks to help support food banks this season. We'll have more on that when we come back. Report from Dalhousie University is forecasting that the cost of food will rise 4 to 6% in 2026, putting more pressure on many Canadian families. Now, as part of an initiative to help food banks, Purelator is donating 8 retired delivery trucks to food banks across Canada. Let's get more now from Stephanie Jacobelli. She is the manager of community investment at Purelator. Stephanie, thank you very much for joining us today.
Yes, thank you so much for having me today here at North York Harvest Food Bank.
It's unfortunate that you have to donate these. It's great that you're doing it. It is unfortunate that you're donating them. How will they be converted and what will they be used for?
Yeah, so we are so fortunate to have the opportunity to donate retired curbside trucks to food banks across the country. We have 8 that are going out across the coast or across the country from New Brunswick all the way to BC. And the uses really vary depending on the food bank and how they're going to be putting it into motion. Some are going to be using it to deliver food right from their warehouses and their food banks out into the community. And others are very creatively using them as mobile food banks as well.
And what would have happened, just out of curiosity, what would have happened to these trucks if they weren't being donated?
Yeah, sometimes we recycle certain parts. We try to reuse them as much as we possibly can. But as Purelator looks to electrify more of our last mile vehicles, we are going to have more opportunities like this to find a great home at different food banks across the country moving forward.
And some of these, will they be used also for hot meals that I see that may be converted to almost like a kitchen on wheels?
Yes, very much so. Here at North York Harvest Food Bank, where I am today as one of the many recipients of our trucks, they plan to use this to deliver food out into the community, whether it be the non-perishable food items or hot food items as well, which is going to be a great way for them to better deliver for the communities, the families and the individuals that need it most right now.
How did you come up with the idea of repurposing these? I mean, it's great to see so much involvement from corporations because so much help is needed right now. Where did that idea come from? And are you looking at other possibilities on what you might be able to do to help charities?
Yeah, absolutely. So our Purelator Tackle Hunger program has actually been around for 23 years. It is a passion of our 14,000 employees right across the country. And we have been doing tons of different fundraisers for different food banks right across the country from coast to coast. And one of the things that we're hearing loud and clear from our food bank partners is the cost of transportation is really preventing them from being able to deliver for their communities. So hearing that and obviously doing what we do best, which is transportation and shipping and logistics, we saw an opportunity to take our retired vehicles vehicles and deliver them to food banks to be able to help them to, limit some of those significant costs that they face through transportation. And we continue to be out there doing different activities and events through our CFL partnership, as well as doing barbecues and raffles and all kinds of grassroots fundraising at our terminals right across the country.
And do you see more of these trucks coming in? And how do you decide which trucks end up making the cut and going to the food banks?
Yeah, so we work very closely with Food Banks Canada. And so earlier this year, when it was identified that we were going to have some trucks that we were able to donate, we got in touch with Food Banks Canada to take a look and see which food banks across the country have reached out to them this past year, saying that they could really use some transportation help. Maybe they need another vehicle, or maybe they have one existing vehicle in their fleet that's really on its last legs. And we worked with them to identify, and right now we're delivering them across the country this month in the season of giving, really just to celebrate the holidays and making sure that they're able to meet the rising demand of client use that they're seeing.
It is, and it's increasing massively. Thank you very much, Stephanie, for joining us today, and thank you for the work you're doing. We appreciate it.
Thank you so much.
Stephanie Iacobelli is Manager of Community Investment at Purelator. Coming up, Market Movers with Bloomberg. We'll talk about that next. All right, time to take a look at some movers and shakers. For more on that, we're joined by Bloomberg's Natalia Knežević. And Natalia, thank you very much for joining us.
Thank you for having me, guys.
Let's talk first solar. First, makes sense.
Exactly. So this is one of the best performers here in the United States. Today in the S&P 500 index, stock is up after news that Alphabet will buy a clean energy developer, Intersect Power. So this is one of the Alphabet's biggest deals. Of course, it will give access to more electricity for its data centers. Intersect is focused on clean energy solutions, which basically helping big data centers, and it includes solar, battery storage projects, and First Solar agreed to supply a massive amount of solar modules from 2025 to 2029, and it is expected that Intersect Power will be its largest buyer by 2029. So that is why we see this big upside in First Solar shares today.
Yeah, the markets are liking it right now, up 6.5. Next up, Navid. What's unfolding there?
Yeah, so Navan is up today after it was added to broad market Russell 3000 index and small cap Russell 2000 index. The stock has posted actually one of the biggest intraday moves since its October initial public offering. So we saw IPO in October. In the beginning, we did see some big spike in its shares. However, as of now, the stock is still trading by about 40% below its IPO price. What is interesting for me is that analysts are really bullish on the stock. When we saw analyst initiations, they really like this AI story in Navan because it's a travel company which uses AI to help customers to find better deals or manage their costs. But nevertheless, yes, we see this bullish coverage. However, the company is still unprofitable.
All right, we'll have to see. I know tourism is a huge thing, but it's also controversial right now. Let's move into the wind and see what's blowing there. Wind stocks are down.
Yeah, so we have lots of movers today across clean energy space. So we do see that shares of Dominion Energy as well as some other wind energy companies are down today after Donald Trump administration said that it suspended leases to 5 wind farms under construction on the East Coast. The administration cited some national security concerns, specifically saying that massive turbines will interfere with radar systems. So analysts clearly did not like that. We saw that TD Cowen analysts are saying that early-stage projects are at risk. Evercore, of course, said that Dominion Energy and its coastal Virginia offshore wind projects sees a big headline risk. And then RBC also mentioned some other projects and other stocks like GE Vernova. So overall, yes, developers are at risk, and then wind turbine suppliers can also lose some margins. So this is some of the key takeaways from analysts' coverage of this news.
Okay, we'll wrap it up there, Natalia. Thank you very much. That was Bloomberg's Natalia Kanevich. Now, the U.S.'s pursuit of a third oil tanker off the coast of Venezuela has intensified a blockade that President Donald Trump's administration hopes will cut off a vital economic lifeline for the country and isolate the government of President Nicolas Maduro. Bloomberg's Stephen Stapczynski breaks down the situation and the possible impact on oil markets.
For those just catching up, the Trump administration had basically taken a sanctioned oil tanker a bit back earlier this month, and that was seen as their operation. The blockade would be for sanctioned oil tankers. Not all of Venezuela's oil is sent on sanctioned tankers. There are a number of dark fleet vessels that have not been sanctioned by the U.S. Now, over the weekend, this has changed. The Trump administration boarded a vessel that was not sanctioned, and now they're pursuing another one that hasn't even loaded any crude yet. So this is certainly them trying to put a maximum pressure on companies to not be able to at least export or take any of Venezuela's crude that is sanctioned by the United States. Now, the small caveat, of course, is that Chevron has a waiver to allow them to export some of it. So it doesn't affect everything, but it is going to affect essentially most of it.
OK, so where does it leave oil prices in the context of oversupply pressures as the bigger picture?
You know, Venezuela, it's not an enormous producer in the grand scheme of things. They have very large reserves, but they're only producing less than 1% of global demand. So if the Trump administration were to bring all of their exports down to zero, yes, you would probably see a knee-jerk reaction where you would see an increase in prices. People are trading on sentiment. Maybe there will be a mixed match between what China has to buy and they have to find other supplies elsewhere. But in the grand scheme of things, it doesn't really affect the global supply balance because the market is facing quite a large oversupply going into 2026. Demand hasn't really increased more than that supply is being added to the market. OPEC Plus is adding barrels. U.S. supply is very strong. There are other countries as well adding more. And so when you look at the larger supply-demand balance, even if you remove these barrels, you might see an increase in prices for a few days, but we are going to be trending likely downward, according to banks and analysts, just because there's so much more supply than there is demand, especially going into next year.
And that was Bloomberg's Stephen Stapczynski. Well, a term called Thriftmas is turning out to be a popular one this year. Instead of buying full-priced items, some shoppers are opting for second-hand to save a little money and still get some great deals. CTV's Sarah Plowman has more.
The aisles map the route. Shelves hold the treasure. Thrift stores are full of finds, and Paige Morgan is out to discover them for Christmas.
It's better for the environment and in my pocket. I have a very small pocket.
We have a lot of...
As higher costs drag bank accounts down, thrifters have more company. Home care worker Kathy DeLong helps seniors, and today is helping those who are shut in shop for Christmas.
Everybody's on a fixed income, and especially seniors. They got to watch their money very carefully.
Thrift stores have noticed a lot of traffic this season.
We sold a lot of toys. A lot of families that are coming in that can't seem to afford the full cost of a lot of the stuff, but still want to give the kids things.
Same down the road, where shoppers scoop up furniture or decorations.
It's those, a lot of times it's those unique gift ideas. Oh, I'm looking for something really interesting for a family member. And
this Fredericton consignment store has also noticed a bump in sales.
I think people have caught on that you can stretch your budget further and not sacrifice quality or the styles you want.
Beyond the discount, store owners highlight other perks.
You're not having to, get into the commercialism, and you're repurposing valuable things, people that have loved in the past, and they're getting passed on so someone else can love them just as much.
Another reason for this mom to buy her kids toys here.
Some toys he gets that are for gifts, I find them in the thrift store, like for $5, and it's just better to get them here instead of them going to the landfill.
Swapping Christmas for Thriftmas. One find at a time. Sarah Plowman, CTV News, Fredericton.
And that wraps up this edition of Trading Day. I'm Roger Peterson. Thank you very much for joining us.